This Parag Parikh mutual fund has given a returns of 35% in just 1 year. But this mutual fund is not for you. In fact, if you invest in this mutual fund, you might end up losing more money than actually making more money. What? Well, I'll tell you why. Because there is something far more important to consider than the expense ratio or the fund manager or the returns or everything combined. And today we are going to talk about that in particular, but also the other points that one should consider while choosing a mutual fund. So let's start the video. And I am Kalyan Kumar. I'm an NISM certified investor and I have been investing from last 7 years. I have over 1,50,000 followers and I'm also a mutual fund distributor. So let's talk about mutual funds and what are the pain points for the investors. The number one pain point for any mutual fund investor or someone who is willing to invest in mutual fund is what should be the goal. Well, goal-based investing is the far most important point while considering a mutual fund, but people do not consider it because they don't understand their goals, and their goal has to be very time goal. Like it has a solid timeline, like 3 years or 10 years or 15 years from now, amount of money that one should consider. Like let's say I have a goal of going to Dubai for a vacation with my family and the total expenses required is somewhere around 5 lakh rupees, right, for the entire family. It includes the flight, it includes the stay, it includes all the experiences that we are going to have, plus the miscellaneous, plus the food, everything combined 5 lakh rupees. That's what I need in 3 years. So do you think I should invest in stock markets and lose all my money? What if there is a dip? Then what? All my money is gone. What about my trip? That is why one should very smartly analyze a goal and invest accordingly. If it is a short duration goal, one should consider investing in bonds as well, not just mutual fund, because the primary goal here is not just to make money. In fact, the most important primary goal here is to actually save the capital. Beat the inflation, but save the capital. And somewhere 8 to 8.5% returns is a good enough returns if your goal has a smaller duration. But if your goal has a longer duration, for example, from 10 years from now, you're going to go for abroad, or your kid is going for higher education, or 15 years from now, right? Your son is going to get married, your daughter is going to get married, and you need a corpus amount. For that, you can invest in stock market mutual fund, equity mutual fund. So there are multiple mutual funds one has to understand, and that is why goal is important. A lot of time your goal is just to save taxes. In such a case, you must invest in ELSS mutual fund, which has a lock-in period of 3 years. Now that we are clear with the goal, now we need to understand that there are a few things that one should consider. Whether one should go for an active mutual fund or a passive mutual fund. A passive mutual fund is nothing but an index mutual fund. And for any index mutual fund, all you need to see is a tracking error, it has to be lower, and the expense ratio, it has to be lower. And for an active mutual fund, one can consider multiple things: expense ratio, AMC, and the fund manager, the returns it has generated over the years, and the reputation of the fund, the AUM of the fund. Everything has to be considered while choosing an active mutual fund. Now comes the third parameter that one should consider, which is expense ratio. Should you go for a lower expense ratio or a higher expense ratio? Now people would be thinking, what a stupid question it is. Why not go for a lower expense ratio? This is where you're wrong. So basically, if you're choosing a mutual fund just based on the expense ratio, if you are going for a lower expense ratio, trust me, you're doing the biggest mistake. Why? Because the fund manager isn't capable enough. Yeah, he's a decent fund manager, but if you want a good fund manager, a better fund manager, then you have to pay a price. But what about the returns? So the higher expense ratio is charging you higher expense ratio for a reason, because they are generating more returns, because the fund manager is charging a lot, he is capable enough, he has experience backed, because if the returns is significantly higher, why shouldn't you pay a little bit extra? So that is the reason why you should consider, you should definitely compare low expense ratio mutual fund versus high expense ratio mutual fund. Now comes another pain point, which is direct mutual fund versus regular mutual fund. Most of the people think that why shouldn't we just invest in direct mutual fund? Oh well, you can, but you have to be someone who understand what is goal based investing. The way I just simplified everything for you, like what is the goal, the tenure, and all of those things. It's a little complicated, But if you understand that, if you understand what kind of returns I can generate, what kind of fund manager this is, you can do your research and then choose a mutual fund, because trust me, you are going to be invested in next 15 years. You just cannot go for any mutual fund. That is where an agent comes in, and that is regular mutual fund. Definitely the expense ratio is on a higher side, but that person will understand you, that person will make sure that you reach your goal, and it will be more fruitful for you. It depends person to person. If you are someone who can understand mutual funds and you can choose the right kind of mutual fund yourself, go for it. You might make better returns than a regular mutual fund. But if you are someone who does not understand mutual funds and still go for a random mutual fund just based on the suggestions given on internet, then my boy, you are making a big mistake. So that is where I come in, where I teach you everything about how to choose a mutual fund and all of those stuff in one-to-one call, where I understand your goal, I tell you about your planning and all of those stuff, and then suggest to you a proper mutual fund that you should go for in a SIP fashion way, and that is how you are going to generate wealth for yourself. If you would like to book me, this is the number. Just send me a hi and we will take things ahead from there. There's few other stuff that you need to consider. For example, how's the fund manager? Choose a right kind of fund manager, and rest I think you have got yourself covered. All the pain points that one should consider while choosing a mutual fund has been discussed. I hope you enjoyed the video. Subscribe to this channel because we are going to talk about mutual funds, life insurance, health insurance. We're going to talk about stocks, equity, everything. So it's all in all the perfect channel for you if you're someone who is just starting your investment journey. I will see you the next time. Thank you so much. Bye.